Welcome to the GSC webinar series. This video will cover the Business Risk Assessment, or BRA for short, as well as what the AML CFT inspectors will be focusing on during the AML CFT inspection, and some best practices that you can take. A BRA is a documented assessment that identifies, evaluates, and manages the risks that operator faces, particularly in relation to money laundering, terrorist financing, financial crime, fraud, and regulatory compliance risks. The purpose of the BRA is to assist relevant persons to understand where, how, and to what extent they should prioritise in combating ML, TF, and PF. This assessment should be taken as soon as reasonably practicable after the operator commences business, therefore, as soon as the operator has gone live. The BRA is a living document, and changes to the BRA should be documented regularly, whether this be an update from a significant event, for example, the National Risk Appetite Statement, or a new product launch, or at the very minimum, an annual review. The BRA should be completed by AML CFT experts, such as the MLRO or AML CFT compliance officer, along with subject matter experts in fields such as the operator's customer base, products, and services. It is important that the BRA is not a template or off-the-shelf document, and that it is tailored to the operator. Each operator will have their own risks dependent on the relevant factors listed in the code. The code lists 7 factors that all operators must consider within their BRA. These are the nature, scale, and complexity of the operator's activities, any relevant findings of the most recent national risk assessment relating to the Isle of Man, products and services provided by an operator, how these products and services are provided to customers, including whether the customer is met, any involvement of third parties within the CDD process, the technology risk assessments, and the customer risk assessments. Assessing the nature of gambling activities, the size of the operation, and any complex activities that may need additional scrutiny will help an operator identify specific threats or vulnerabilities that exist in ML, FT, and PF. The nature refers to the category or types of gambling. For example, an operator targeting standard retail customers, or VIP customers, or B2B customers. Each category or type has different risk factors attached to them. The scale refers to the volume and value of activities and the geographical spread. And the complexity refers to how complicated the operator's business model, product, customer base, payment flows, and corporate structure are, and this can increase the AML CFT risk. The latest National Risk Assessment provides an overview of the online gambling sector vulnerabilities and threats, which may be relevant to an operator and therefore considered within the BRA. During an on-site inspection, the inspectors would expect the operator to be aware of the typologies reported within the National Risk Assessment and any other guidance issued by competent authorities. If they are applicable to the business, mitigations documented within the BRA is required. Products and services provided by an operator needs to be considered within the BRA. An operator offering peer-to-peer product, such as poker, would need to consider the risk of collusion and their mitigation strategies. An operator offering sportsbook will need to consider corruption such as max fixing. The way the product and services are provided refers to the delivery and transaction methods. For example, if a customer is not met face-to-face, means that the operator is reliant of the customer providing copies of documentation, or when transactions are carried out in time-sensitive environment, may result in staff members feeling rushed and be more likely to carry out cursory checks rather than a fully considering transaction. Consideration must be given to third-party involvements within the CDD process. Third parties generally fit into two categories, either agents or introducers that provide CDD to the operator, and entities that outsource the functions. Where CDD is not provided directly to the customer, there is an increased risk that this might not be complete, accurate, and up to date. And this needs to be considered within the BRA if it applies to the customer. Each technology risk assessment must feed into the BRA. In practice, the TRA is not a separate exercise. The findings of the TRA feed directly into the operator's BRA so that the overall ML, TF and PF risk profile reflects the technology being used. And finally, the operator's customer base must be given consideration within the BRA. For example, the number of high-risk customers, number of PEPs, jurisdictions and typical transaction sizes. This doesn't need to be a review of each individual customer, except in circumstances where the operator only has a small number of customers. During an AML CFT on-site inspection, the inspectors will be focusing on the following areas: the governance and ownership of the BRA, the methodology of the BRA, the customer risk, the geographical risk, product and service risk, payments and transaction risk, technology risks, the controls and the effectiveness, and the operator's risk appetite. And to conclude, let's go over some best practices to consider. Make the BRA evidence-based, so use actual customer transaction, suspicious activity reports, or EDD and jurisdictional data, and avoid using the generic or unsupported risk ratings. Use customer risk assessment outcomes to inform the BRA, so use trends from the customer risk assessments to determine overall customer risk, and explain how PEPs, high-risk customers, and enhanced due diligence cases influence business-wide risk. Incorporate technology risks, so ensure findings of the technology risk feed into the BRA, and assess the AML CFT impact of onboarding, screening, and monitoring technologies. Align to the national risk assessment, so demonstrate awareness of the islands and gambling sector risks and explain how relevant the national risk assessment findings have been considered. Show a clear risk appetite. Clearly state which customer types, jurisdictions, and activities are acceptable and which are not. Weight risks appropriately. Not all risks are equal. Consider whether customer, geographical, payment, or technology risks deserve a greater weighting. Document residual risk. Identify risks before controls, document mitigation controls, and the remaining residual risk. And finally, include an action plan. Include an action plan and ownership and the review dates. For more information, please find information on the GSE code requirements on our website.